And that's the message behind Bank 3.0, my new book that comes out on the 25th of October. Last plug. Thank you very much.
Just for those watching the clock, he was bang on time there. Thank you. So thank you. We do have microphones in the audience for questions, if you have some. I will kick one off. So you basically battered the banks a little bit. Is there a chance to have a completely branchless bank?
Look, I think there's...
Would a traditional bank be able to do it?
That's the second one's a tougher one. We have evidence that there is, of course, because we have ING Direct, who, you know, although they have coffee shops, they don't really have branches. UBank in Australia was able to grow 10 billion in deposits in 4 years. You know, I think there's definitely evidence that that's possible, and as this new distribution layer emerges, I think there will be collectively a new Amazon of banking, if you like. I think Movement Bank, Bank Simple, others who are trying to break the friction in the system will be great examples of that. So I think it's more likely by the end of the decade that we will have a great mix of non-branchless, non-branch banks and a few that still have that mix. In terms of the shift, the biggest problem is metrics internally and, you know, the budget constraints internally within a traditional retail bank. There's so much budget put into real estate right now. Unwinding that is really tough. And all the metrics, you know, as I said, like the mortgage product, all banks think they're making heaps of money on mortgage in the branch, but if you actually looked at the whole sales cycle, they'll realise that the branch isn't the value creator in the mortgage. But we don't have the metrics right. So until we get the org structure right, have the right way of measuring the way consumers behave and interact with us, and then that can reprioritise budgets, it's going to be very, very hard to turn that ship.
It's a good transformation. Have we got any questions from the audience? We've got microphones here. Who wants to be brave? Special prize for James, being the first of the day.
So Brad, here's my question. If any of the banks here today got really good at advice, I mean, really, you know, really genuine, not really impartial, but
sure,
do you think they could save themselves at least temporarily?
Okay, so the big problem with that is that, yeah. So the big problem is that advice is actually more powerful when it's given contextually, when it's given when and where you need it. So the problem is that if I have to wait to get the advice, or I have to come down and get the advice compared with someone else who can advise me in real time when I've got a problem, when I search for it, or where I am contextually, they've got an advantage over you with an advisor in a physical space. Now you could say, well, let's send the advisor to them with an iPad. And that's a possible solution. But advice in the branch is not as powerful as advice when and where you need it. So let me give you a simple illustration. Banks don't generally advise you on a day-to-day basis of what to do with your money. They will advise you of how to get better interest rates, or what account to put it in, and how to manage your investments, but not overall in terms of your financial health or wellness. So what we've done with Movement Bank is we've created a behavioural feedback loop to help you with financial health and wellness in a real-time advisory capacity, advice at scale. You pull your phone out, you make a payment at a point of sale, and we give you your receipt on the screen. We say, well, there's $10 for that coffee. And you go to this coffee shop every morning without thinking about it too much. You buy a coffee and a bagel if you're in New York, right? And you do that every day unconsciously. And you don't really know how much you're spending on that activity. It's unconscious. And then I say to you, well, you spent $10 today, but did you know you spent $280 in Starbucks this month? Whoa! Oh, and by the way, you spent $850 eating out this month already. Now, tomorrow morning, on your way to work, when you normally go to Starbucks for that coffee and bagel, guess what happens? You change your behaviour, because burning in the back of your mind is the fact that you spent $280 this month on coffee, and you're trying to save up for that deposit on a home, or that trip for the family over Christmas. That is great advice, because it helps you change your life, right, in real time. Banks are not incentivized to give you that type of advice, because they make more money out of it when you take credit, or when you make bad decisions from a financial health perspective. So I struggle to see how they could get to that point of really being advice driven, and based on the current cost of distribution layer, I struggle to see how they would pay for that. So ultimately, new distribution layer of manufacturing.
Thank you. We might save any more questions as a panel at the end of this morning. we'll save some questions. Please thank Mr. Brett King.
Thank you, guys.